So who in the right state of mind would bet $2.4 million against one stock only, and not through shorting the stock, but by actually buying 1,000 put options contracts that don't expire 2 years from now, that don't expire 1 year from now, that actually expire within the next 45 days. So who would that person be? Well, actually, it probably wouldn't be an individual investor. It would be an institutional investor. And before I will reveal exactly what stock they're making such a huge bet against for using put option strategy, let me just describe briefly what's currently happened in the markets, and the phenomena that I have been able to observe is what I call being Facebooked. Okay, a lot of companies that have a business model that is interdependent or highly dependent on being able to advertise on Facebook, or highly dependent on being able to have access to Facebook data, they're dropping like rocks right now. A good example of this would be right here. If you've been following the channel, if you've been a student and subscribed to our student services, okay, you would have been informed right before this drop happened on this company right here, Axiom, who is heavily dependent on Facebook data. In a matter of 72 hours, this stock has experienced a 30 to 40% drop, just depending exactly where you measure it. If you take $31, it dropped all the way down to $19 and bounced back to $22. Now, there is a number of companies that are about to experience similar drops, and if you would like to know which ones they are, stay tuned through the end of this video. So let's go back to this crazy bet that this one institutional investor has placed and expecting a huge drop in this stock in a very short amount of time, literally in the next 45 days, is Shopify. Yes, the little gem that potentially could drop by as much as 70 to 80%. We have been talking about Shopify on our channel. I've actually posted a video on March 17th and March 26th talking about a potential drop in Shopify when it was trading around 146, 148. Since then, it has dropped from that level of 146, 148 all the way down to 120, and currently is traded at 124 and some change. Now, what I have observed and what I have informed the students about is I have noticed this sizable bet against Shopify, which came in on Thursday during the trading session at 11:34, Thursday, March the 28th. You can see somebody has purchased, which typically would be a huge institutional investor, because the bet is very sizable. 1,000 contracts were purchased at 23.9. So 1,000 puts at 144 strike. The cost of each put is $2,390. The total cost of this trade is $2,390,000. The trade was placed at the time Shopify was traded at 123.28. Shortly after that, it actually dropped to about 120, 150 range, so that bet was making $100,000 within minutes. And then it bounced it back to where now it's in the 124 range. Now, the interesting thing is, typically we may see a sizable bet like this that would be extended out into a longer time frame. For example, 90 days to, maybe a year out in options expiration. What makes this bet interesting is they're buying these options with expiration on May 18th, so which is, roughly 45 to 48 days out, as of Monday market open. I'm recording this video over the weekend. When markets open Monday, we're going to be in April, so there's going to be 45 or 44 days left before these options expire. Now, please keep in mind, these options would only make money in the event that Shopify would drop below the $120 level. It's interesting to notice that the company is expecting to announce earnings on May the 1st. So May the 1st, this bet really tells me that on May the 1st, whoever is placing this bet, they're really thinking that there could be some negative comments revealed during the earnings announcement that could negatively impact the share price. So when are we expecting a substantial decline? Well, we're expecting a substantial decline around May 1st. So why would you, however, is the question of the day, place a 2.4 million bet a month ahead if you think the major price movement is not going to take place roughly till a month later? In other words, why wouldn't they wait for the stock to go back to, let's say, 133 range, as we can see on the graph? Because that would literally save them, what, about $800,000? So why are they pulling the trigger here? Well, the only logical answer to that could be that they're thinking the stock will decline further before going into the earnings report on May 1st. So what type of action could you take to profit from observing such interesting information? Well, if you are looking into getting into trading options, I'd like for you to get a clear picture and gain more knowledge before you start placing the trades. If you're interested in learning more about options, visit marketcrash.money. Click right here, how to profit, and schedule your one-on-one consultation. If you're an experienced trader that's been trading for a while and you're curious about generating some new stock ideas, some new trading opportunities, possibly some new shorts, it is not the Axiom company that was affected by Facebook. It is not just Shopify that is being affected by Facebook. I actually have a list of a number of companies that will be dropping as a result of all the Facebook drama that's been going on in the markets. If you would like to gain more knowledge, more access, more information, if you would like to profit from this new market environment, again, visit marketcrash.money, hit right here, how to profit, schedule your one-on-one consultation, take action now, and make your 2018 the most profitable year ever.